Good morning from London. I'm Anna Edwards alongside Kriti Gupta and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. Donald Trump makes an early exit from the G7 meetings as tensions escalate in the Middle East, but says his departure has nothing to do with any potential ceasefire. Equity futures dip and oil gains after the US president takes to social media to call for an evacuation of Tehran's 9.5 million residents. Plus, the Bank of Japan holds rates and shows caution in its plans to withdraw from the bond market. Governor Ueda speaks in half an hour.
In the meantime, of course, we are monitoring what's going to happen in dollar yen. At the moment, we're at a 144 handle, just shy of 145. A lot could change, however, in 30 minutes' time. So perhaps some stability in that currency pair. I'm going to work my way up because, as Anna mentioned, the Middle East very much in focus there. A 73 handle on Brent, paring back some of the gains we've seen on Friday's session and yesterday's session as well. In the meantime, risk sentiment when it comes to equities really taking a turn for the lows. A Euro Stoxx 50 that's down almost 0.8%. The countdown to the opening trade starts right now.
I gave Iran 60 days, and they said no. And the 61st, you saw what happened. Day 61. So I'm in constant touch. And as I've been saying, I think a deal will be signed, or something will happen, but a deal will be signed. And I think Iran is foolish not to sign one.
Welcome to the programme, everybody. This is the opening trade on Tuesday, the 17th of June. Lizzy, the violence continues in the Middle East. But, of course, a lot of the market's focus, the geopolitical focus, has actually come from the G7 overnight.
And, indeed, the president has left early, and we don't know why.
We don't know why, and the market's not feeling so great about it, but a little bit of a reversal from what we've seen in the last couple of days.
Yeah, let's get an update on some of the news lines we've had coming from the G7 and the significance of the departure of President Trump. But let's bring in Bloomberg's Oliver Crook, who's monitoring all of these international geopolitical developments for us. Oliver, take us through the latest.
Yeah, Anna, so listen, it's been a very sort of consequential few hours. And again, the headline about 6 or 7 hours ago is that Donald Trump is leaving the G7 meeting early to go to Washington, D.C. in order to give his full attention to the escalating situation between Iran and Israel. But the precise way in which he's going to give that attention, we do not know. Why? For that, we go to Truth Social to see what he has posted over the last couple of hours. And the one that has really grabbed the attention was about 6 or 7 hours ago, saying that basically Iran should have signed the deal, that Iran cannot have a nuclear weapon, and that everyone should immediately evacuate Tehran. Those were the pronouncements of the President of the United States just a few hours ago. And then following up to that, as we're seeing now on the screen from commenting on the comments of Emmanuel Macron, who had said that Trump was going to D.C. to basically work on a ceasefire with Iran, saying that that is basically entirely wrong and that this is something much bigger and to stay tuned. This, of course, creates speculation in two directions. One, that there could be an imminent deal with Iran, that there is going to be a discussion. We had some reports a little bit earlier from Axios saying that Steve Witkoff could potentially meet with the Iranian foreign minister in the next couple of days. But, of course, the other side of the spectrum is that there is speculation that the U.S. could take a more active role in Israel's military campaign, potentially joining on. Again, we do not know in which direction this is going to go. This is potentially part of the design from the Trump administration, who clearly has said from the very beginning he wants to get a deal with Iran. But it seems as if we are currently in the sort of maximum pressure part of the sort of negotiation between the United States and Iran. And we should say that the G7 also collectively basically made no criticism of Israel in the sort of way that it was attacking and bombing Iran. And we should also say, just as a final point, that this is the G7 meeting. This is supposed to bring geopolitical stability across the globe. We went into this meeting with very high tensions. It is a much more explosive situation going out. And we should say one of the many consequences of this is we're not talking, for example, of the massive bombing campaign that happened overnight from Russia into Kyiv that has killed 14 people. So all of this sort of adding up as the president is on Air Force One on his way back to Washington, D.C. as we speak.
Oliver, thank you very much. Bloomberg's Ollie Crook there in Berlin, but keeping his eye on all of the global geopolitical developments pertaining to the G7. Let's think about what we've learned from this G7. It is interesting, as Ollie said, that we did manage to get to a joint statement, although it does seem as if it was watered down from initial versions. The initial versions maybe were a little more critical of Israel and calling for more of an immediate ceasefire on a number of fronts. Some of that language was removed, but they did manage to get to something that resembled a joint statement, and they're very keen to emphasise the fact that they see Iran as the source of the tension in the Middle East. That's the G7's view. But then having digested the way they came together and coalesced around the statement, then we see this explosive language from President Trump about Emmanuel Macron, about the fact he's not right, he gets things wrong, either intentionally or not. And you do wonder whether multilateralism lives to fight another day.
Well, yeah, leaving a summit early on which Donald Trump has formed, by the way, and we know that he thinks that they're a bit of a bore, is surely the opposite of a coordinated international response. And then, as you say, following up by speaking ill of Emmanuel Macron and questioning those comments from Macron. Look, what else is Trump leaving for, if not to go and get a ceasefire between Iran and Israel? What could be bigger, is my question. What else is he going home to work on? And then also, you know, when Ollie sets out those two potential options here, the good option being maybe they get to a nuclear deal, the bad option being that the US gets involved with Israel's attacks on Iran, the market's pessimistic here. And remember, when Steve Witkoff's been involved in negotiations before, it's not necessarily led to the peaceful outcome, particularly when we've looked at Ukraine.
Well, and the fact that in just the last 48 hours or so, Donald Trump has also reached out and spoken to Vladimir Putin as well as a key player, a key stakeholder in some of these discussions, specifically when it comes to Iran. But there are others as well, and I think notably absent from his conversations in terms of approaching Israel outside of G7 is how he's interacting with European leaders, and that's going to be something to watch in this region.
Yes, and Lizzy's already nodded towards this, the way that the market is hanging on all of these words, the market responding, the ups and downs of risk appetite, very much being dictated by the US president and his stance, but all of the day-to-day developments, what Iran is prepared to agree to as well.
Absolutely.
It's interesting that you've seen commodity tankers avoiding the Strait of Hormuz, regardless of the idea that it's so politically and logistically unfeasible that Iran would block the strait. We heard that from analyst after analyst yesterday, but you've seen almost 60% in less than a week freight rates anyway, and surely that's going to add to inflation. So the market's seeing that as well.
Absolutely, and I think this is crucial as well because the oil market paired a lot of those losses, and it feels like there's a little bit of a ripple effect here. And you saw the commodity market in the last 48 hours take a bigger move in terms of in both directions. Now is the equity market's turn. The conversation we had literally 24 hours ago here was that the equity market perhaps wasn't as pronounced of a reaction in yesterday's trade. Today, it seems the opposite, and a lot of that weakness concentrated here in Europe.
I do think it's interesting the way the market is responding and not to the things that President Trump is saying here, because of course we're hanging on the every word, but there is a sense that maybe there's some fatigue setting in as well. I mean, if you look yesterday, this wasn't from Trump, but in terms of the Middle East developments, yesterday the reports that Iran was willing to talk to the United States, that sent risk appetite higher. Then overnight, when President Trump calls on the residents of Tehran to leave, we saw risk appetite drop. Then we saw a little bit of a tick upwards when we got some other comments from him, reports of discussions actually around Iran and the US and whether they could meet. And the most recent lines around, you know, this is nothing to do with the ceasefire, Emmanuel Macron gets it wrong. Markets didn't really know what to do with that, and they just sort of stalled. And we are at a position where US futures are down around 0.3%, looking for the next signal.
And European futures down even more. Well, let's look over to Asia while we digest all of that. Of course, the Bank of Japan holding rates as expected, but more of a focus on the bond buying programme and the fact that they're going to slow tapering that from the start of the next fiscal year from 400 billion yen a year to 200 billion yen a year. Again, it was kind of expected. And when you look at the market reaction, you've seen 10-year JGB yields up. Again, it's not really a surprise. And the way analysts are kind of talking about it is that they've bought the rumour and now they're selling the fact.
It's fascinating as well, though, because as we said at the top of the show, dollar yen kind of in a cautionary moment right now. And I think it's interesting what the BOJ and what Governor Ueda is going to have to say about the oil price move, because Japan is one of the biggest importers of oil, and a lot of the inflation moves that they have is driven by the oil price. So if you see a sustained level, I'm looking at 73 handle on Brent here, say above 70, does that make the BOJ more dovish, or excuse me, more hawkish in the next couple of months?
And that's the way that the Middle East agenda finds its way into the Bank of Japan's agenda, just as for many central banks we're watching this week. What's the inflation outlook? And so with that in mind, interesting to think, what are we going to be watching for from the press conference? I mean, one of the core things is what kind of guidance do we get from Ueda around the next hike, the timing of it, the extent of it, the likelihood of it, because there are those in the market who are starting to question that. Food prices, obviously a big issue, and stability at the long end of the Japanese market. That's something that has gone global, and that is something that no doubt will be coming up. There'll be questions asked about.
And with so much uncertainty on the table, as you say, hard to keep hikes on the table clearly. as you say, Kriti, a headwind for the yen, especially when the ECB is signalling that it's near the end of rate cuts, that Lagarde wants a stronger euro, saying so in an FT op-ed just this morning. So, a difficult position for a wader in that press conference.
Let's tell you what else is coming up in the show then. We have plenty of voices around the table and joining us remotely as well to take us through the latest news lines. Eric Lonergan joins us from Calibrate Partners, discretionary macro head. We'll get his perspective on the latest news developments, but also his views on including, the BOJ, where he has some interesting things to say. Lotfi Karoui joins us, Goldman Sachs chief credit strategist. We're working our way towards a Fed meeting. What's the outlook for the credit markets? Ian Harnett, Absolute Strategy Research co-founder, will be with us. And taking on the G7 topics and Israel-Iran latest, we'll also be speaking to Jose Manuel Albares, the Spanish foreign minister. That's ahead of a European foreign ministers meeting, and the Spanish have been a bit more critical of Israel within the EU than other voices. So we'll get a perspective there. We'll also speak to Jane Kinnamont, Middle East watcher, with a lot to say on the future of multilateralism.
And lots to look ahead to on the data front as well. At 9 a.m. UK time, so just less than 2 hours. We do get the IEA oil report as well. What are the oil dynamics, especially going into perhaps one of the more sustained periods of higher oil volatility that we've seen in quite some time? Plus the German ZEW or ZEW survey coming in at 10 a.m. UK time. But then all the focus, I think, from a consumer standpoint, shifts right to the United States. At about 1:30 p.m. UK time, those retail sales are going to come in, perhaps throwing a little bit of cold water or tailwind to what the FOMC is thinking.
So we've got a busy day ahead. Here's what else you need to know this morning. US Senate Republicans have drafted a new version of President Trump's signature economic package. The bill expands some tax breaks, raises the debt ceiling by $5 trillion, and makes permanent 3 business tax breaks that were set to expire after 2029. The plan comes at the expense of curbing health coverage for some low-income Americans and makes no mention of a deal on the state and local tax deductions. US President Trump has signalled that he's in no rush to impose tougher sanctions on Russia. Trump expressed concern that imposing sanctions would cost the US, quote, billions and billions of dollars. European leaders have pushed Trump on new sanctions, arguing that it's critical to forcing Russian President Vladimir Putin to negotiate in better faith to end his war in Ukraine. And Prime Minister Keir Starmer has reached an agreement with President Donald Trump to implement terms disclosed last month to cut US tariffs on key British exports, as well as increase imports of American farm products. The two presented a document signed at the G7 in Canada, which moves forward on measures easing trade in cars, agriculture and aerospace products. But the agreement didn't promise an immediate cut to US steel tariffs. So that an important win for Keir Starmer, but actually very, very disappointing on the steel front. And it looks like we're going to have to wait for Howard Lutnick, the Commerce Secretary, to actually decide when those steel quotas are going to come in and what level of the quota will be.
Yeah, it's really interesting how, there are trade deals and there are trade deals. And I thought we'd agreed this deal. And now you seem to have to assemble to agree to implement the deal that you previously agreed to. And even at that point, you can't agree to everything. So it does seem as if we are, symbolically, we're talking about deals being done, perhaps, but not necessarily with all of the detail. And, of course, this means that, yes, this is a win, as you say, for Keir Starmer, and he's managed to get this done before lots of other countries. Canada not having a deal, Japan not having a deal, and there had been some expectation, given the trade-heavy team that Trump had taken with him, that those kind of deals might be hammered out around the G7, or at least progress made. Well, with President Trump leaving early, you wonder if any progress can be made on that front.
And that was certainly something high on Mark Carney's agenda as well, given that he was hosting the G7 summit and wanted to lead with that as well. I thought it was interesting, though, that defense continues to be a key carve-out from this deal as well. And I think that's crucial, given that has been a legacy of the transatlantic trade relationship for quite some time. But the steel, to your point, is a piece that he's dealing with some domestic pressures as well that he's unlikely to change on. So that's going to be something we watch very, very closely. We also know that the cracks, or actually the progress between Donald Trump and Japan's Ishiba also didn't quite come to fruition. Lots to digest in the show ahead, lots for the markets to price in. But coming up, we're going to go right back to Guy Johnson. He joins us from the Paris Air Show with interviews from the Dassault Aviation CEO and the Director General of the European Space Agency. Plus, as we discussed, the BOJ held rates, but Japan watchers now waiting for Governor Ueda to speak. We'll bring you the headlines and the market reaction as they break. But up next, as I said, right back to the markets. Futures are lower on both sides of the Atlantic, extra concentrated right here in Europe. But oil continuing to rise. Markets facing those heightened risks out of the Middle East. We'll digest and discuss coming up next. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Welcome back. This is the opening trade. Tuesday, the 17th of June. European equity market futures are pointing lower. US futures also pointing lower this morning. And it does seem as if some of the commentary we've had from President Trump overnight calling on residents of Tehran to evacuate, that kind of commentary is sticking to the market sentiments, and that weighed on sentiment. We have seen that sentiment be a little bit volatile. Just yesterday, we saw a boost to sentiment driven by what's, talk in various media sources as to what Iran is and is not prepared to sign up to when it comes to conversations with the United States. But all of that, the market keeps under review, of course, and sentiment right now on the back foot just a little bit. So that's where we are on futures. Let's think about how markets are watching developments in the Middle East and what the focus is. Eric Lonergan joins us, discretionary macro head at Calibrate Partners. Very good to have you with us, Eric. Nice to see you. So there's lots to discuss. It's a big week for central banks. We've had the BOJ. We'll get to that. Lots of other central banks meeting as well. But in the more immediate moment, the market is very focused on developments in the Middle East. From a market perspective, narrowly from a market perspective, is it all about inflation? Is that the lens that you use to look at this?
Yeah, the oil price is the most obvious metric. Now, if you looked at a 4-year chart of the oil price, to be honest, you wouldn't even know anything particular was going on. So at the moment, from a market standpoint, in terms of the critical asset price, that is a barometer of Middle East tension, for want of a better term, is really the oil price. And oil price, there was an initial minor spike, but if you actually look at it now over a longer period of time and stand back, the market's interpretation is there's nothing economically significant going on. I mean, in terms of the course of human history, this could be profoundly significant, particularly if things change in Iran. I mean, I think the really interesting story in some respects that gets underreported about the Middle East is really social and political change in Saudi Arabia. I mean, Saudi Arabia has been transformed from being a religious state to being a sort of secular authoritarian state, and that is profoundly important in terms of the context of the region. The big question is whether an economy and a country of the scale of Iran could also shift along those lines, but, you know, nobody really knows in that regard. Yeah,
we feel like we're at the foothills of that story, if indeed that is the way that things were to develop. And we've no idea, have we? So in the here and now, and in terms of dealing with this inflationary impulse, if that's what it is that we get through these markets, through that move higher in oil prices. I suppose in a sense the move higher has not been that huge, but given that it fell into a market that was used to getting lots more oil from OPEC Plus and the direction of travel had been downwards and central banks were able to cut rates because they didn't have to be quite so worried about inflation as they had been, it falls into a market that's sort of taken its eye off inflation a little bit. Is that why it matters as well?
Yeah, to be honest, I don't really think it changes the inflation outlook materially at all. I think the really interesting thing about the inflation facts of late is that the impact of tariffs seems to be less than we would have anticipated. So there's already been some research out of the New York Fed on this, which is suggestive that not only is the pass-through from tariffs lower than what we might have had, but it looks like the underlying trend in inflation was more disinflationary. And so far, you know, tariffs are everywhere except for in the inflation data. And so I think, you know, you mentioned the BOJ earlier. I'd interpret the BOJ as being a moderate easing of policy. And I think we're going to see that from the Bank of England and the Fed as well, because actually what's happening to the developed world is that inflation is coming in softer than anticipated and growth is slowing and labour markets are weakening.
There was, however, you talk about this kind of undercurrent of kind of disinflation that has been baked into this macro. There has been a worry that some of the tariff increases around the world is going to create an inflationary impulse that has yet to show up in the data. For those that are concerned about positioning a portfolio to navigate inflation, does this bring back macro tourists into the oil picture? Is oil the solution to that the way it was 3 years ago?
No, I mean, I would not take, you know, oil is not a very good hedge, in my view, in that regard. I think, personally, I wouldn't be looking to hedge against inflation. If anything, I think concerns are overstated. Yeah, because, you know, there's a huge, I'd say probably the biggest fundamental macro inconsistency out there is people worried about the long end of the bond market and bullish on AI. And those are fundamentally inconsistent. Like, if you listen to, and funnily enough, they're coming from the same people. So if you look at all the tech evangelists are saying, excuse me, we should be really worried because everyone's going to lose their job. And at the same time, they're saying budget deficits are unsustainable. That's actually a totally inconsistent perspective. I mean, if AI is coming after our jobs and creating productivity, interest rates are going to collapse. If interest rates collapse, there's no interest to pay on the federal government's debt. So I actually think the really big theme here is about when do we start to see the impact of AI on the economy. I think we're already seeing that. To be honest, tariffs history are going to look back on and go say this was the largest amount of noise. You know, it's a classic distraction a la Trump. It's really not the big picture, in my opinion.
So, Eric, let me push back on that. You're talking about if interest rates collapse and you see interest kind of dissipate on the long end, but that's not really what the concern is around the deficit. It's about pre-existing interest that we're already haven't been paid. That doesn't go away necessarily if you have interest rates drop.
The point I'd say to you is that if you look at the behavior of bond markets, even the long end of the yield curve, as an empirical fact, there's simply no relationship between gross public sector debt and the long end of the yield curve. In fact, this is, if you look cross-sectionally, the countries with the largest amount of debt in the world have both the lowest and the highest. So if you look at Japan's at one extreme and Greece is at the other, Greece has the highest rate of interest and Japan is the lowest. If you look at even the long end of the 30-year bond yield, even if you look at somewhere like the UK, which is at the high end, ex the Eurozone, ex the UK, you've got the 30-year close to 5.5%. Actually, UK gross public sector debt to GDP in the context of the G7 is at the lower end. There's just no relationship. What dominates is where short-term interest rates are in inflation. So the problem Japan has had at the long end of the yield curve is look at the trend of inflation in Japan. You know, Japanese inflation continues to trend higher. So the real call about the bond market is what happens to short-term interest rates and what happens to inflation. Because the part of the equation that people miss out, you know, you listen to Ray Dalio panicking about the bond market because he does supply and demand forecasts. You can't forecast demand. Right? If economies start to slow and inflation comes down, there's going to be a huge amount of demand for government bonds.
Eric, I've got to ask you about Section 899. You've got the US Senate starting to debate the tax bill today, and already Republicans, planning to delay and scale back Section 899. If we just take it as it was, what would be the consequences for the market? Are you worried about it?
Yeah, I think markets in general are worried about the institutional predictability and stability in the United States, for sure. And this is just yet another example of that. I mean, I think the Fed is a much more profound question because, you know, we're going to have an issue about who's going to head up the Fed next year. It's going to be a political appointment. It's going to be a political appointment with an assumption that the political appointment does exactly what they're told to do by the executive. Exactly. So that's compromising central bank independence. If you challenge the rule of law, institutional independence, predictability of policymaking, you will get a risk premium. Doesn't matter what country you are.
OK. Eric Lonergan, always good to have you around the table. We thank you for joining us on the early shift. Eric Lonergan, discretionary macro head at Calibrate Partners. Good to see you. Well, coming up on the programme, how is elevated uncertainty playing into the credit market? We're going to get the view from Goldman's Lotfi Karui next as we await that Bank of Japan press conference from Governor Ueda. So do stay with us. This is Bloomberg.
Welcome back. This is the opening trade, 7:30 here in London, and it is a BOJ day, which means we are focused on what is happening there. More on that in a moment. Let's check the markets for you. And futures here in Europe are pointing lower. We are nervous. Markets are nervous still about developments, of course, in the Middle East. The focus still is on whether we see any expansion in the current conflict between Israel and Iran, whether there is any US involvement. President Trump leaving early from the G7 and calling from on the residents of Tehran to leave their homes has certainly added to the nervousness in markets. And so we wait for further news lines as to what the purpose of that early departure was, and all of that plays into the market thinking. In terms of bond markets, then, the focus, of course, is, well, over in Japan, it's around the BOJ. Here in Europe, we see very little movement, as you can see, around the 10-year horizon on European debt. We see a little bit of a move lower, and those yields coming up just a couple of basis points or so. Kriti, I see that Governor Ueda is speaking in Japan.
Governor Ueda started speaking, and as we wait for those headlines to kind of cross the wire, I believe that the press conference is happening in Japanese at the moment, so we need to wait for this to be translated. It is worth re-mentioning the fact that the BOJ has not changed their ultimate rate outlook at the moment, but they have pulled back when it comes to their bond purchasing program, and this was something that they had kind of had been reported in the media for quite some time in terms of them perhaps negotiating or talking with, for example, banks within Japan about how they could proceed in terms of some of their issuance as well. So we're going to see what he has to say on that, as well as perhaps some of the inflationary impulses from around the world. But he has indeed started speaking. In the meantime, we should bring in perhaps another guest who can help us maybe interpret how the world of macroeconomics and the world of all this geopolitical volatility is showing up in the credit space. Our chief credit strategist at Goldman Sachs, Lotfi Karoe, hopefully I'm saying that right, joins us around the table. Lotfi, pleasure to have you on the program. Talk to us a little bit about your initial impulse when it comes to just the movements of the last 3 trading days that we've seen, specifically in the oil space. You're a credit analyst, but that has a very clear read-through into things like high yield. How are you thinking about it?
I'm thinking about it in terms of persistence, basically. I think, the key takeaway right now is that the market has sort of treated this as a local shock in the oil market. If it persists, and by that I really mean beyond like a week or two, then I think it's a bigger conversation and you'll likely see a spillover, to the broader sort of risk environment. You're absolutely right. I mean, there are pockets of the credit universe that are overexposed to energy and more broadly commodities. High yield in the U.S. is a great example. 11% of the index is actually oil and gas company. And if you add up metals and mining, you get to like 15% of the market. So you do get a little bit of an embedded hedge when you own high yield because of that sensitivity. But I would say the key is really the persistence of the shock. And we'll see what happens over the next, couple of days.
Would that be a positive, though, the persistence of the shock? Would that be a positive for the oil sector, the oil credit sector specifically?
For the sector, yes. For the broader index, I don't think so. I think if this morphs into a bigger supply shock that weighs on consumption, demand, et cetera, I think the market will treat that as risk-off. But for the sector, yes.
As we keep an eye on that press conference in Japan, you've got the ECB signalling an end to rate cuts and Christine Lagarde again in the FT today calling for a stronger euro. But the Bank of Japan, seemingly stuck in place when it comes to rates. What's the knock-on effect of that divergence for global credit?
Well, the Bank of Japan has been an outlier for quite some time. It's sort of the last G10 central bank to sort of normalize monetary policy. What I found actually interesting is the 2 weeks prior to this press conference, where we had that big sell-off in the back end of the curve in Japan, 30-year kind of touching 2.8, 2.9. We haven't seen a lot of spillover, to your question, to the rest of the G10 complex. So to me, that tells you that the market is sort of still treating Japan as a little bit of an outlier within that sort of broader G10 complex. But so far, no spillover, to U.S. rates, for example, or European rates for that matter. And I think that will remain the case.
But do you have to factor in rising oil prices to your outlook for Japanese credit more because, as Kriti's pointed out earlier, there's more of a reliance on the imports of oil for Japan, say, than for the US?
Yeah, I will have to see how persistent that shock is. But I think if we're talking a week or two, the market will likely look through that, in my view, and so will central banks, by the way.
So what's the strategy right now, then? When you look at the credit universe, I'm thinking about US debt. We've talked a little bit about the oil place in that and some of the global dynamics coming into credit markets. But when you look from IG, high yield, are you talking about going up in quality at this point because you're nervous about where things go, or down in quality? What's the driver?
Slightly down in quality. And I say that mainly because of valuation. We're sort of back to square one a little bit. But if you look at thematically, the credit universe, spreads are sort of back to where they were at the beginning of the end, which is sort of uninspiring from a valuation standpoint. And so we like being down in quality, not because we expect spreads to overshoot valuation constraints, but really because we think it's worth grabbing that excess carry. So double B bonds over triple B bonds, single B bonds over double B bonds, et cetera. As a source of excess carry, yes, but not as a bet for further compression.
When we see the geopolitical developments such as happened on Friday and over the weekend, I mean, in the immediate moment, does that make it, or have you seen evidence that this makes it more difficult for global corporates to go into the market and raise the money they need? It didn't have, because there have been episodes this year where we have seen bond markets, stall for a moment, corporate credit markets stall, but this was not one of them.
No, I mean, you're right. We had a 2 week period, late March, early April, where I would say the high-yield market specifically kind of shut down. IG rarely shuts down. In fact, even if you go to 2008, at the height of the global financial crisis, the investment-grade market did not shut down. But in leveraged finance, yeah, we saw a little bit of a pause. This was not like that.
But that was all trade-related, was it?
That was all trade uncertainty, yes.
Yeah.
And a very aggressive repricing of recession risk, too, which you haven't seen this time around.
Lutfi, hold that thought. I just want to bring you some of the latest headlines we're getting from Governor Ueda as he continues to speak at his press conference in Tokyo. He's talking about long-term rates being formed financial markets, reiterating a lot of what we heard from the BOJ statement as well in terms of reducing bond buying in a predictable manner. He also talks about, and as expected, really confirming the reports that the BOJ has actually reached out to market participants. He's also addressing the fact and the possibility of a sharp yield rise. I think that's really interesting. He's saying they're responding, they have the potential to respond nimbly, but in the meantime, Japan's economy is recovering moderately. Lutfi, this is a conversation we've heard from central bankers around the world, and they're trying to address some of the slowdown in bond purchases while also increasing issuance. This is something we've heard as a potential around Scott Bessent as well in the States. What happens if you move the issuance from the long end of the curve to the front end of the curve? How does that affect corporate credit?
Well, you know, you'd have to see both markets kind of pushing in the same direction to see an effect. And the reality is so far we have not seen that. And so it would have been problematic if we were in a world where government supply is increasing alongside corporate supply. I would say outside of the Euro investment grade market, which is having a pretty good year, it's up 6% relative to last year. In the U.S., this has been sort of a below average year. I mean, high yield new issue volumes are down 22% relative to last year. Investment grade is up a little more than 4%, which is sort of an average year. So that crowding out concern, you know, that you're describing, I think would be problematic if we saw both corporates and governments issuing at the same time. That hasn't happened so far. And so what you've seen is governments issuing more, corporates behaving more conservatively, which is the historical pattern, by the way.
You referenced the fact that corporates are issuing a lot more in Europe. That reverse Yankee issuance trend has been quite popular. How long does that sustain, though, especially when you've seen the equity markets, the currency markets start to recover in the opposite direction? Does that show up in credit anytime soon?
You got to remember, like, this is the perspective of an issuer. So what you're trying to solve for is essentially minimizing the relative funding costs. The carry differential between the dollar market and the euro market is very elevated at the moment and will likely remain so because the U.S. is in a different sort of macro setup a little bit. So I actually think reverse Yankee issuance, particularly from multinational companies that have, you know, multi-currency liabilities, that have a natural hedge. They sell a lot of their products in Europe, and so they're naturally hedged on the FX side. That will remain the case in my view. And it's really reflecting sort of some kind of an opportunistic behavior where you're trying to solve for the market that gives you the better funding cost.
Lutfi, can I ask you about the longer-term picture for rates and what you're thinking about at the moment? We just had an interesting conversation with Eric Lonergan, who was talking about something that sounded maybe a little bit like great moderation, you know, rates much lower, perhaps driven by AI and a lot of productivity gains and that sort of narrative. Others are preoccupied by the fact that a lot of the forces around demographics and climate change and all of those sort of drivers might lead us to more inflation in the future and therefore higher rates. What's the big picture, sort of medium, long-term outlook for you?
I would offer two observations. I think the first one is that there is a new floor on the term premium, which is that risk premium that you're demanding as an investor to hold duration. And I think a lot of that is a reflection of a new reality on the fiscal front. And so, for example, if tomorrow we have a recession, I don't think 10-year yields in the U.S. will go to 2%. Highly unlikely. It's possible, but it's highly unlikely. So there is definitely a floor. Now, would I take it as far as saying that treasuries have lost their sort of value proposition as a hedging instrument for a multi-asset portfolio? The answer is no. I do think that if tomorrow we get hit by a growth shock in the U.S., I actually think, you know, yields will likely go lower. And I think that correlation will protect multi-asset portfolios exactly as it should. And by the way, there's been a lot of negative buzz around that, you know, that correlation's kind of breaking down, you know, dollar rates and risk assets. I'll give you one stat. From January 1st to early April, the Barclays Agg was up 3.7%. The S&P was down 13%. So actually, if you look at that correlation from a low-frequency standpoint, it worked.
Okay.
Sometimes people try to cherry pick a little bit and point to some sessions where it didn't work.
Okay, so treasuries can still be that haven.
I think so.
Okay, Lutfi, thank you very much. Lutfi Kariri, Chief Credit Strategist at Goldman Sachs. Thank you for your time. Coming up, we'll be back with Guy Johnson at the Paris Air Show. He'll be speaking to the Dassault Aviation CEO live from the event. That's next. This is Bloomberg.
For those of you who are missing Guy Johnson, let's get straight to him now. He's on the ground at the Paris Air Show, and he's with a guest. Guy.
Lizzy, thank you very much indeed. Yeah, Eric Treppier is the CEO of Dassault Aviation. Europe's trying to figure out what it does with its next generation of fighters. How many does it need? How interoperable should they be? Obviously, the challenges are mounting, particularly given the situation that is occurring in Ukraine, but it goes wider than that. We're watching what is happening, obviously, in the Middle East very carefully as well. Eric, good morning.
Good morning.
Nice to see you. Always a pleasure to speak with you. Does Europe need multiple fighter jets?
Yes, for sure. There are concerns everywhere in the world, and everyone now wants to reinforce its defense capacity.
But don't we just need one? One that everybody can buy, that everybody can operate, that we can bring all our resources and knowledge together in?
No, I think there are some US fighters, French fighters, maybe other fighters as well, and all countries need to reinforce its own capacity. Then we'll have to see what is going to be the future.
Right.
We are preparing the future, but when you are preparing the future, you have some time to prepare.
Okay.
Financing, technologies, and who may say what is going to be the mission in 20 years.
Yeah.
So now we are really focusing on reinforcing the air capability with Rafale, for example, in France, and with unmanned vehicles.
Sure. But,
working together.
But aren't there overlaps? Aren't there resources that get wasted if we end up producing multiple fighters? Do we need a French fighter and a British fighter? Should we just have one European fighter? Should we have a European fighter that is led by Dassault? Wouldn't that be ideal?
Look, it's a good idea, and I think the Europeans should do so. But then we'll have to see whether we may be capable to be together with a really effective organization,
okay,
with a team which wants performances, because we are not developing peanuts, we are developing fighters,
yep,
and the armored forces need to get the best one. I mean, so it's true in the US, it's true also here in Europe. So the idea of cooperation is not only to cooperate, it's also to design and develop the best fighters in the world. We are part of these very few companies who are able to master really the technology from A to Z,
yep,
including with our partners, engines, avionics,
yep,
radar, countermeasures. So we have this know-how, we have this capability, and we want to continue to get it. If there are some partners who want to join, we may join. I mean, we did a Neuron demonstrator, which was with 6 countries, 6 companies, and that was a real success in order to develop and master the technologies for air vehicles.
At the moment, you're in partnership for the next generation of fighters.
Yeah.
You currently produce the Rafale. Obviously, the iconic Mirage came before that. You're in partnership with Airbus, which kind of makes up the German side, effectively. And you've got Indra in there with the Spanish side. Can you see a situation where, like with the Rafale, the Dassault just goes it again, goes on its own? Because there appear to be difficulties in that consortium.
What we say is, in defense, there is no reason why to look at profit. You need to look at performance. And we may see everywhere in the world today, when you have to face Russian fighters or even Chinese fighters tomorrow, you need to be the best. If the cooperation between Dassault and Airbus, or between France, Germany and Spain, is to do so, I will support. If it is only to say Germany wants this type of job, France wants this type of job, Spanish wants this type of job, and it's a kind of bureaucratic organization.
The politics is getting in the way of performance at the moment.
Yeah, they need to say what they need. They need to put the financial investment to do so. But then, what I recommend them is, in the past, you have a leader in the governmental side,
yep,
armored forces, and then you have a leader for industry. That's nothing more than that.
And Dassault should be that leader?
Yes, I feel that we should be the leader, not because we want to be the leader, but because we are the only one to really master the technology. If you give a look at the Rafale, who else in Europe can do something like the Rafale?
Okay. Would you be happy, therefore, to see Airbus join the other consortium, which is led by BAE?
No problem, but maybe BAE also. The question was that at that time, in 2017, We were with BAE to try to develop a future combat vehicle. But there was a change in politics.
Yes.
They wanted to get us to be with Germany. So we start with Germany.
But you're not happy with Germany, is the impression I'm getting.
Well, it's not that I'm not happy with Germany. I'm not happy with the governing system which leads for a very performance vehicle supposed to be.
So you will end up with a subpar, an aircraft that can't deliver on performance if we keep with the current structure.
Yes, and I may say also that the French Air Force has a certain experience in Europe. We have the deterrence capability, the nuclear capability, which means that we have independent technology to do so. So we have this long outstanding experience in the fighters. I think if Europe wants to do something, they need to rely on this experience.
Right. So you could see a situation. It sounds like you're moving towards a situation where you think Dassault goes it alone and builds a fighter jet.
We may go alone.
France.
If there is a good cooperation, well organized, why not?
But you can still see a situation as well, if that is the case, that where Airbus departs, joins maybe the GCAP consortium, and we see that as...
I saw that before. The name is Eurofighter.
Right.
So we're heading, I prefer the Rafale. This is not a surprise for you.
Okay, no, it's not a surprise. We're heading to, but you see we're heading basically towards a Eurofighter slash Rafale kind of environment.
Yeah, if there is a very clear requirement from the armed forces, and mainly for the French Air Force, as far as I'm concerned. I am French. I support the French armed forces. If there is a very clear requirement, if there is a good spirit and a governing situation, or not situation, governing process.
Led by Dassault.
Led by the French and by Dassault. In this field, maybe in other fields, maybe Germany or Italy or British, no problem.
What about interoperability between the two programs? Is there an argument for sharing engines, ammunition?
Yeah, you may get interoperability without having the same equipment. Interoperability, by definition, means that you can operate together. And we are part of NATO in France. We operate with the US fighters during the crisis, whatever they are.
Yep. You brought up what happened about performance. So let's just talk about performance. Has there been any concern coming from customers as a result of the Indian Air Force's operations against the Pakistanis?
Not at all. We have been able to talk through our French official with the Indians. They are happy with the results.
Why did we lose so many Rafales?
How many aircraft the US lost during the Second World War?
Okay.
They won the war. The idea is to be able to complete your mission, to hit your targets. You may lose aircraft. We'll see whether in this conflict now no aircraft will be lost or some aircraft will be lost. When you are at war, you need to accept that you may lose fighters, tanks, even soldiers.
Fewer the better, though.
And that's unfortunately what is war.
Was there the right equipment operating with the Rafales? Was that the problem? I.e., was there early warning? Is that where the gap in the technology existed?
No,
was it within the Rafale or was it within?
I think the technology step by step improved. We need to improve the sensors, radar, countermeasures for the future, as we did before. We have been upgrading all these sensors for the last 20 years. The Rafale is not the one which was designed at the beginning. It's really upgrade every 5 years with new standards. And maybe this is what we are pushing. If we may design and develop a UCAV in order to work in patrol with the Rafale, we will improve the capacity of stealth, because the UCAV may be stealth, but really stealth, not half stealth like some fighters may be, totally stealth, and that will be an advantage in the timing we have to develop.
Eric, great to see you. Thanks for stopping by to see us. We really appreciate it. We really appreciate your time that you give us. Eric Trappier, the CEO of Dassault Aviation. Anna, the Open's about to happen. We'll see how Dassault stock opens this morning. Watching that one carefully as ever. Back to you in London.
Thanks very much, Guy. Of course, on the ground there at the Paris Air Show. Really fascinating conversation there about the extent to which European players can work together when it comes to the defence sector. Let's just detour around the world to wrap things up. We've got the BOJ press conference ongoing. Some interesting lines around UADA saying they looked at the long end of the bond market when thinking about what they did today on their bond buying, but not much movement in markets as a result of the BOJ.
Not much movement, but I think the one headline that's sticking out, and I think very well encompasses the conversation every central banker and every investor is having around the world. So Governor UADA says there is a risk that inflation affects price expectations, and said ultimately that the price expectations, or the fact that a sustained oil price may actually keep people worried, actually has a reverse effect when it comes to the inflationary measures, and that's something he's going to be talking about. As you say, Anna, 144 handle on dollar yen still. Some tick-by-tick moves, but not so much. The bigger moves happens in European futures. Those continue to sell off. Stick with us as the opening trade next. This is Bloomberg.
Welcome back. This is the opening trade. A few minutes to go then until the start of trading this morning. Let's have a look at yesterday's session and remind ourselves of what has been driving sentiment on these markets. Interesting that yesterday we were caught moving lower in terms of risk sentiment. This is the Stock 600 in Europe, of course, ahead of the US Open. But then at the time we saw the US markets opening up, we saw those reports that perhaps Iran was prepared to talk to the United States, and that added a little bit of risk sentiment. Overnight then, we've lost momentum, Kriti, and futures have been hit by some of the commentary we've had from President Trump around what's going on in Iran and his recommendation for those in Tehran to evacuate, essentially. All of that weighing on risk sentiment, and the fact he departed very early from the G7.
Absolutely, and headlines crossing the terminal now about simply how this may actually proceed from other media outlets as well, talking about the fact about the urgency in the Middle East and how the White House is approaching it. That is not assuaging some of the moves you're seeing in the likes of the DAX, for example. Almost 1% declines, Lizzy, when it comes to here. The FTSE 100 perhaps a little bit spared from the same carnage you're seeing on the continent, but a lot of that has to do with the oil price exposure that the FTSE has in its index.
Well, speaking of energy, we keep an eye on clean energy stocks at the open, Kriti, because they could be weaker in Europe after US Senate Republicans released that bill that would end tax credits for wind and solar earlier than for other sources. So we keep an eye on the likes of Ørsted, Vestas, SSE, RWE, also Lottomica, because Gamma intends to sell its entire stake in the Italian gaming operator. And we must watch Deutsche Telekom as well, on the news that SoftBank's selling its T-Mobile stake to fund the AI push. Deutsche Telekom, of course, T-Mobile's biggest shareholder. So we watch for the European read across. Anna, take us to the open.
Yeah, absolutely. So some interesting individual sectors and individual stocks that could be on the move. But big picture, we're still very much focused on developments in the Middle East. The way that the G7 is trying to forge a path ahead on this subject. We saw them coming to an agreement, a joint statement, but some fallout between the US and France. Very clear to see from some of the things we've heard from President Trump on Truth Social. So we watch all of those geopolitical developments. We watch the developments within the Middle East. And all of that has left markets a little bit nervous heading into the start of trade this morning. So the futures were negative, as you rightly pointed out, Kriti. We're down 0.4% then at the start of trade on European equity markets. The FTSE 100 is down by around 0.4%. Oil prices had been resilient because, of course, of the geopolitical tensions in the Middle East. We saw that certainly on Friday, a little bit yesterday, and a little bit the early part of today, but actually just dropping in the most recent couple of hours. But still, the relative performance of oil majors might benefit the FTSE 100. The CAC 40 down by 0.7%. The IBEX under pressure as well. Kriti, what catches your eye this morning in terms of the way that the session has started?
Absolutely. Well, I mean, your guess is 100% accurate here. And then when you're looking at the index contributions, it is a sea of red in terms of the risk-off sentiment. The gains, or I should say the losses, are broad. The gains are sparse, except for when you look at the oil sector. And Anna, you pointed this out rightly. Total, Shell, BP, and a lot of the renewable energy names that Lizzy mentioned as well. Those are your gainers this morning. But again, not by some marginal moves. Your biggest index contributor to the upside is Total, and it's only higher by 0.3%. I think that really indicates and underscores some of the risk-off sentiment you are seeing in this market, including the fact that your traditional defensive sectors, like healthcare, for example, or even technology, are not actually lifting this market. They're dragging it down.
Yeah, so you've got energy as the best performing sector, but not eking out any gains as a sector. And if you look at the oil price now, WTI crude down 0.3%, as is Brent. You mentioned some of those renewable names, Kriti. You've got Ørsted down more than 2%. Same for Vestas. SSE down 8-10%. So it's a miserable day off the back of what's happening on Capitol Hill. But let's get some analysis now. We're joined by Ian Harnett, who is Absolute Strategy Research co-founder and chief investment strategist. Good to have you back, Ian. It's a negative start this morning. Of course, we've got lots of headlines coming out of, it was Canada, but on Iran and Israel latest. How are you feeling about how to price in that geopolitical risk?
So I think actually the surprise to me is just how limited the response has been in these markets. We haven't seen much more of a shift into those more defensive areas. The scale of the moves that we've got both in the United States and in the European feed through this morning, still I think, probably underestimating some of the risks that you've got, particularly bearing in mind the global uncertainty from tariffs that are overlaying this. So when we look at things like our own measures of equity risk premia, we've hardly seen any move at all. And, that I think is a very dangerous situation for these markets. Clearly, we're still being driven by momentum, by liquidity, and that is holding these markets up. Could go further, but it's still a very risky environment.
I mean, when you look at the commodity tankers already rerouting around the Strait of Hormuz, does that give you particular cause for concern when it comes to inflation?
So I think that there are clearly inflationary pressures. I think we'd already seen some of those supply chain indicators coming through, some of the consensus expectations as well about inflation, and things like the Philly Fed and the NFIB inflation numbers also pointing to rising inflation. So our economics team definitely think that inflation pressure will rise and inflation volatility will rise. And I think this is one of the reasons why you still need to be slightly nervous about these bond markets. And, I think that's the thing that strikes me, the talk about, we're not seeing bond yields coming down, we're not seeing the US as a safe haven asset. Well, would you expect to in a world where inflation risks are rising, oil price risks are rising, and we ought to therefore see bond yields go up?
Well, Ian, you mentioned those oil prices. As you were speaking, we're getting some headlines, this time coming out of CBS. It looks like Donald Trump has spoken to CBS, saying that Iran is very close to having a nuclear weapon, also talking about working on helping Americans leave the Middle East. And this, of course, follows headlines that we saw earlier on in our show, talking about the fact that he is not only leaving the G7 early, but potentially doing it and monitoring the situations in the Middle East from the Situation Room. Naturally, the expectation is we're going to see some sort of bigger move in oil, and oil is doing nothing but dropping. And I think that's really interesting, Ian, because how do you position a portfolio on an expectation that oil may or may not come back up?
Well, I think what we've seen a lot of clients saying this year is that they wish they just sat there and done nothing. Because we've had this whipsaw effect since April with the tariff events. So I think we'll actually see a lot of resistance to doing hasty moves at this point, Kriti, and that instead we'll see people waiting for the outcomes. Remember that also the role of passive investors here, because once the market starts to move, it could get its own momentum driving on. So I think, the interplay between active investors and passive investors could see things start to move very dramatically when we do get some outcomes. But at the moment, it's still conjecture, and on conjecture, markets haven't really been moving.
Well, in previous iterations of these kind of geopolitical risks in the Middle East, but I would argue in the war in Ukraine as well, the onset, oil was used and commodities broadly were used as a macro hedge by people who are not traditionally exposed to the commodity market. Do we see perhaps a re-entry into that era?
So I think so. And some of the analysis that we've published for clients, just this morning, just highlights that when you look at the 1 month move or the 12-month moves, it depends how much has been anticipated. You're absolutely right. Is it an oil effect? That tends to be the biggest driver of these change. But then when you look further out, it actually comes back to the economics. It's the macro. And is this a large enough move to drive us towards recession, to drive us towards inflation, or create a stagflationary environment? That really has been the driver of what the outcome of these geopolitical events has tended to be. And so, I think this is one reason why we're still sitting here. Lots of uncertainty from economists, record levels of uncertainty from economists, actually, about what's going to happen in the next 12 months. And I think that's leaving investors, very much saying, right, we're going to stick to our knitting, stick to our growth strategies or our value strategies, and we're not going to make hasty moves at this point.
How resilient is the global economy then, Ian, do you think, at this point, or otherwise? Because we're sort of torn by the latest news headlines can lead you in one direction. On the other hand, we're reminded often about the corporate earnings story, the way that a fully developed financial system just sort of motors on anyway. I mean, how resilient are you looking at?
So I think we're looking at a global economy that's likely to slow, as we go to the end of the year. I think one of the things that's still lacking as a big driver is that Chinese story. Europe's recovering to some extent, but the US is lacking a certain degree of activism. And I think the question is there that the economics is waiting for that next stage of investment. We're being carried along in those hard data by the investment that was started prior to the tariff hiatus. What's going to happen next? Will it be that rebuilding America, or will it be, OK, we're going to hold off?
Yes, and with all of the uncertainty, a lot of business leaders talk about, OK, holding off perhaps on investment decisions. Do they also, are they increasingly tempted in that kind of environment with the uncertainty to invest more at home rather than overseas? Are we moving towards a world where finance is more balkanised, where investment and corporate activity is more balkanised?
Yes, this has been one of the themes that we've been emphasising with our clients in recent months, which is the weaponisation of trade will inevitably lead to the weaponisation of capital. And so, this, I think, your point there, Anna, is well made. It's not just the US. We're going to see it in Europe as well. We've already seen it in the BRICS group, where they've been running down their debt holdings of US treasuries. But I think the big surprise to people will be that rise in US exposure in the equity market, now almost 18%, has been going on uninterrupted, whereas the bond sell-off has been coming through since the GFC. So really, it's actually the equity exposure to that balkanisation of capital that you said is the really critical issue here.
So there's more money, so there's more rest of world money in the US that will leave as a result.
Potentially. Yeah. And it's actually, not just a big share, but it's actually a larger quantum of cash as well. And remember, about 2% of the US equity market is owned by foreign sovereign wealth funds that have had the advantage of tax-free investing. It's not clear whether this Section 899 discussion is going to change all that. So lots of uncertainty still out there.
Exactly. On the weaponisation of capital, I mean, you were writing about that in the context of tariffs before. Yeah. Someone dug out Section 899. Now we see Senate Republicans trying to scale that back, delay it somewhat. How much would they have to do that to prevent a rotation into Europe, a diversification?
I think what we've been saying to clients, Lizzy, is we're now being forced to ask questions that we never thought we would have to ask about the trustworthiness of US assets. Stephen Myron's suggestion that they might, force China to put their US treasuries in escrow. These are the kind of things that really change perceptions. And, we do think that will drag down on the US dollar going, longer and further out. But remember, the offset to that in America is you will have this sovereign wealth fund coming through. And, we've been talking to clients about the fact that could be a much bigger issue if we see America start to fund itself via privatizations, replacing some of that international money.
We're already seeing a little bit of that happen in Europe as well, where private equity players are coming in to fill in the sovereign financing gap. Ian, you mentioned this exodus from the United States. Where do they go, if not the U.S.?
I don't think it's an exodus yet.
Potential exodus.
Potential exodus. And clearly people are looking towards Europe. But actually, we're talking more about the South-South trades. Emerging equities would tend to do well in a world where, the dollar tends to come down. But I think the challenge here is that for Europe, without its own, common single credit market, credit union, then that balkanisation of European capital will hinder the investment opportunities and the investment capabilities that we have. And that's one of the questions about how do you fund this defence spending? How do you fund this infrastructure spending here in Europe? So, but remember that historically, it's hard to break the US exceptionalism. You've needed stronger global growth. You've needed US earnings disappointment, so the Mag 7 will need to disappoint. And and you've needed that weaker dollar. Those are three hard challenges that the rest of the world has to confront to really break that US story.
Ian, thank you very much. Thanks for spending time with us this morning. Ian Harnett, Absolute Strategy Research co-founder and Chief Investment Strategist. Let's have a look at the core six then, some heavy-weighted European equity names, and see how they are performing this morning. It is a risk-off day. We are down by 0.8% on the Stock 600, actually down by more than perhaps we'd anticipated. US futures worsening just a touch. ASML is a decent faller. Novo Nordisk also falling at the start of trade. So the chip sector, the healthcare sector, both of those in focus. And elsewhere, we see some fairly well-distributed losses across European equity markets. Let's get more on the individual stocks in focus. Joe Easton has a briefing. Good morning, Joe.
Morning, Anna. So another piece of the market really in the red today is renewable energy stocks. This coming following news of this bill out of the Senate in the US yesterday. This bill proposing that tax credits for both wind and solar would actually end in 2 years' time, and that would be sooner than had been expected. There's been a back and forth on this for a few weeks. Seems to be changing all the time, but at the moment it does look worse than feared in terms of those tax credits actually being not available by 2028. So Vestas, Ørsted, Nordex, EDP, all of those significantly weaker today. Then we do have share placings everywhere you look. It's the busy day for all of those ECM bankers, those capital market bankers. We've got share sales. Universal Music, that was a decent sized one, but the biggest one over in Italy, Lottomica, which is their gambling group, the big one over there. That's about $1 billion worth of stock being offloaded. One of their investors selling their entire stake in a placing last night. Amadeus in travel, and Allied Irish Banking, as the Irish banking, or the Irish government, I should say, looks to actually exit it. So they're selling their entire stake, looking to exit AIB, the Irish bank. I'm not sure why they've done all these placings all in one go, but potentially it is because we saw that gain in stocks yesterday, so a good opportunity to sell out perhaps. Then in terms of placing, but in another region, we had SoftBank selling a bit of a stake in T-Mobile in the US, Deutsche Telekom being the biggest owner of that company, as was mentioned on the show earlier. So we're seeing Deutsche Telekom coming down almost 2% in Germany today. So share placings pretty much everywhere at the moment. Then Ashtead, that one was a little bit higher than that when I stepped away, but it's come down a little bit. That is the equipment rental company. Most of their business done in the US, a pretty good indicator on the US construction market, and the numbers look pretty strong, or at least in line with expectations, in the stock a little bit higher in London, but not a huge move on that one today. Then finally in the ratings, just to bring you, we have got a bunch of initiations from Bernstein on chips. They're actually pretty positive on the sector, saying that the auto chip sector looks better than expected, but looks like the broader market is weighing on the sector today. Infineon is an outperform, but actually the stock declining 1.2% this morning.
Joe Easton from our equities team, thank you so much. Walking us through some of those early movers, we certainly appreciate it as the market starts to digest where we should go with the geopolitics. Coming up on that subject, we speak to Spain's foreign minister on the European efforts to end the Israel-Iran conflict and the role that they play. That conversation next. This is Bloomberg. Welcome back to the opening trade. Headlines crossing the Bloomberg terminal, latest to weigh in when it comes to the conflict in the Middle East. China is now making comments saying that the abrupt crisis in the Middle East serves no one's interest, and emphasizes that those with influence over Israel should help de-escalate. They're also standing ready to help all de-escalate in those Middle East conflicts, and expresses deep concern. This, of course, comes as we also hearing CBS Anna report that there is a potential of some of Donald Trump's representatives to have direct conversations with Iran.
Yes, so we continue to monitor the fallout from the G7, the way that the US administration has left there and is now setting out its latest thoughts on what's going on in the Middle East. And at the same time, Europe trying to find a common voice, perhaps. The EU's foreign policy chief, Kaja Kallas, has called a video conference of foreign ministers for later today to discuss the military escalation in the Middle East. She says the meeting will provide an opportunity to exchange views and coordinate diplomatic efforts. Joining us now is the Foreign Minister of Spain, Jose Albares. Thank you very much, Foreign Minister, for joining us. So you'll be going into this meeting of foreign ministers across Europe, bringing all of your views on Israel and Iran. What message will Spain be bringing to that meeting?
That we need the de-escalation, that war will be of no help to anyone, and that diplomacy and negotiation are the real way. So we have right now to de-escalate this exchange of missiles and bombs from Israel and Iran, between Israel and Iran. We have to make sure that everything related to the nuclear program with Iran is well settled, and we get Iran out of the nuclear weapon through negotiations of diplomacy, and to have a broader picture on the Middle East to make sure that the inhumane war on Gaza is over, that humanitarian assistance, especially for the staff, gets unimpeded into the street, and that we move forward toward the two-state solution that we know that it's the final solution to bring peace, stability, and security for everyone in the region, of course, including Israel. And we will also continue claiming for the immediate liberation of all hostages.
Jose, do you see any signs that de-escalation is in any way imminent? We've heard these calls from European leaders and from foreign ministers that de-escalation should be the focus, but both countries remain under attack. Iran says it has the right to develop its nuclear capabilities, and Israel says it faces an existential threat. Does this sound like de-escalation is going to happen?
No, unfortunately not. I agree with you. I don't see sign of de-escalation. But the voice of Europe is a very strong voice, 27 countries together. We have to be very clear. We are a region in the world that believe in peace and negotiation. Our own history shows that diplomacy and not war is what brings peace and prosperity for everyone. We understand the legitimate claims of security of everyone in the region, but it's not through waging war that they will be achieved. It's through peaceful coexistence. It's through having good neighboring relations. And that's what Europe must stand for relentlessly. We have our own weight in the region, politically, economically. I've been talking all the weekend with all my colleagues, all the ministers of foreign affairs of all the countries in the region, including I've been in contact with the ministers of foreign affairs of Iran and Israel with the same message. Let's stop the exchange of missiles. Let's de-escalate. Let's resume negotiation on the nuclear file, and let's diplomacy be the tool.
Minister, thank you so much for joining us this morning. It's Lizzy here in London. You just called Israel's war in Gaza inhumane. I wonder, how should the EU sanction Israel for its role in that war?
I call it inhumane because I don't see any military objective to this war, unless we want to make a huge graveyard of Gaza. I call it inhumane because Israel is preventing humanitarian assistance, food stuff to get to babies in Gaza. So for me, it's very clear. The time of declaration and war, it's over. We have to move to action. That's suspending the Association Council between Israel and the European Union, enlarging the list of people that are sanctioned. We cannot allow spoilers of the two-state solution, people that only want war to continue traveling to European Union with all normality. And we must impose an arms embargo of selling weapons to Israel. The Middle East, the last thing, as we are seeing these days, the last thing need is weapons. And of course, we have to continue talking about the immediate liberation and unconditional liberation of all hostages, and the reality of trying to help to put in place a real and viable state of Palestine that, living in good neighborhood with Israel, will guarantee mutually, reciprocally, security, prosperity, peace, stability for the whole region.
Minister, it's Kriti in London. The view that you are putting forward at the moment comes into direct conflict with some of your peers in the European Union, notably the United States as well, which is very much, at least publicly, backing Israel in this conflict right now. Would you say that the EU even has a say in a situation where it feels like the international reaction is largely being driven by Donald Trump?
We should have a say. We are a region that has always upheld peace, multilateralism, human rights. Many millions of people around the world look to European Union because they know that all those flags, we are the last one, the only ones that can really raise it with credibility. Our own credibility as European is at stake. That's why today my voice will be very strong, asking European Union to move to make a step forward. We can be with a policy focusing on backing this or that country. Instead, I'd rather European Union and Spain does to be backing peace for everyone, dialogue, diplomacy. That's what we have to back.
Well, Minister, I hear you on that, and I hear you on the human rights component to this conversation as well. But internationally, you would argue, or a lot of folks would argue, watching this conversation, that those who are ultimately supplying the defense have the largest say. We know the United States and arguably the UK as well, from that point of view, have a bigger say. So how, outside of the human rights that you were talking about and the human rights violations that you were talking about, can the EU actively change the dialogue when it comes to what Israel is doing, either with Iran or in Gaza?
As I was saying to your colleague, we have this Council of Association, and in its Article 2, it's very clearly stated that the relationship between European Union and Israel is based on the respect of human rights. It couldn't be any other way. So I'm calling to suspend, precisely based on Article 2, that Council of Association. Then we have the possibility of establishing sanctions, individual sanctions or other ones. We are the largest trade partner of Israel in the world, the European Union. And thirdly, we must impose from European partners an arms embargo, not to sell weapons to Israel as long as this war continues. So we have already very powerful tools. Basically, what I'm asking is European Union to say the same things when it comes to Kiev that when it comes to Gaza, when it comes to Ukraine and Eastern Europe, that when it comes to the Middle East, for the same reason, for the same principles, to achieve the same objective, the protection of civilians, peace and diplomacy.
Yes, Minister, I hear you. We thank you so much for your time. Jose Albares, Spain's foreign minister, joining us this morning on the conflict in the Middle East. Coming up, we're headed right back to the Paris Air Show. More interviews from our very own Guy Johnson. Stick with us. This is Bloomberg. This is the opening trade. About 30 minutes into today's session, we are seeing the losses pile up when it comes to these equity markets. The Stock 600 down over 1%, and a lot of that concentrated specifically in the DAX as well. You would think that defense bid would show up. It hasn't yet when it comes to the DAX. In fact, double down on those losses. We'll continue to watch these markets and the reaction to the geopolitics around the world. But in the meantime, let's get back to our very own Guy Johnson standing by at the Paris Air Show. Guy.
Kriti, thank you very much indeed. You're talking about things that are going down. Let me talk about things that go up, and go up quite quickly. The European space story is one that a lot of people here at the Paris Air Show are monitoring carefully. It feels like we're at a kind of step change moment for European space right now. Obviously, we've been watching what's been happening over in the United States, the revolution that SpaceX and others have created. How replicable is that here in Europe? Joseph Aschbacher is the Director General of the ESA, the European Space Agency, and is sitting next to me. Good morning.
Good morning.
Just out of the corner of my eye, I see a couple of massive Ariane rockets which dominate the skyline here. Why doesn't Europe and its space industry dominate in the same way that we see in the United States? What is it that we're not doing here, not funding here, that we need to fund to be on par?
Yeah. I mean, I wouldn't say that Europe is not dominating. We have some of the programs that are the world's best programs. I take Earth observation. The Copernicus program is delivering the largest amounts of data of our planet. We say we take the pulse of our planet from space with our satellites. And we use this data for agriculture, for forestry, for civil protection, for all kinds of applications that actually create a real economic value. We have a multiplier. If €1 is invested in our Copernicus program, it brings back about €5 into the economy in terms of value added and new businesses created and new services that are being sold within Europe and outside Europe. So there's a very good example where Europe has really, I would say, leadership globally in terms of space technology.
If you had more money, but is it a money thing? Do we just underfund space here in Europe?
We do underfund space in Europe. Let me give you some figures. This is Bloomberg. You like
we like numbers.
You like economic figures. No, we have an investment globally of the space economy from the public side of about 100 billion euros today or last year. 60% of it is invested in the United States, mostly through NASA.
So 60%?
60, NASA and the Space Force in particular. Europe's share is 10%. So you already see 10% compared to 60%. There's a factor of 6 between the US and Europe in terms of public money put into space investments. And that, of course, is seen in public. You mentioned SpaceX. Why do we not have a SpaceX in Europe? Of course, if there's a huge investment on the public side, commercial companies can develop because there are contracts and opportunities given by the space agencies in order to really develop huge programs. And certainly then private money flows in and helps it accelerate. And this is exactly what happened in the US. Of course, we want to do the same in Europe, but with 1/6 of the budget on the public side, it's a bit difficult to have the same speed and the same acceleration.
You're coming up on a funding round, though, aren't you, in terms of what you're going to see from governments for the next 3 years? Does that number go up?
That's exactly my point. I'm talking to decision makers every single day here in Le Bourget, but every single day we need to step up. We have the excellence, we have the engineers, the scientists, the capacity to do it. We can run large projects, we know how to do it, but of course we need to fund them. And this year in November we have a big funding round, we have it every 3 years, where we are making a proposal. I'm putting one together right now. We're working on this since about a year already to really make sure that Germany, France, Italy, but also medium, smaller countries are satisfied with what we put on the table. And this is quite a complicated exercise, as you can imagine, but absolutely fundamental to really make sure that Europe steps up. But I think the argumentation today is much easier than, say, half a year ago or a year ago. On one side, you have the economic argument that it's an economic sector that grows very fast, about 10% per year, the space economy is growing. On the other side, you have now something that has become much stronger, which is the strategic argument of independence, security, also defense, which of course has to do with the geopolitical
So you're going to take
situation.
on a defense role? Is that the next step for the ESA?
I would not call it the defense role, but
security
certainly
role.
we are proposing now, and I've been just last week requested by my member states to propose a program for European resilience from space, which is security and also meeting defense needs. That means we build up a constellation, or we are about to build up a constellation for security users.
Does that mean that you could focus there? Because what we have is the combination, the coming combination, we'll wait and see whether it happens later this year, between Airbus, Leonardo and Thales. Their space businesses are coming together in Europe. So we're seeing some consolidation in Europe within the space business. Do they do the telecom stuff and the technology? You've got Iris at the moment, but should we leave that side to the civil side and the ESA becomes effectively the security story? Do we need some segmentation?
I think we will always invest in all segments of space. And we do everything from space science, that means exploring the universe and really asking some the questions about the very existence of...
The big questions.
The big questions are, where are we? Where do we go? Is there life out there? All these big questions we are addressing, and we have satellites or telescopes looking at that. But then, of course, we focus on our planet Earth, from climate to natural resources to the daily economy that we are supporting. We have navigation, telecom, but also, and this is a new dimension that's coming now, which is the security and defense part. It's new, it's not completely new, but certainly something that is expanding more. And yes, this is something where certainly also Europe in general, including European Space Agency, will be engaged further. Always on the request of our member states, because they need to invest in defense and security, and we are the vehicle in space to do that.
So you should be part of the defense budget. Is that something that we should look to include?
There are some, and this I'm expecting now, that at the funding round at the end of this year, in some countries, not in all, but in some countries, there may be defense budgets contributing to our ESA budget.
Within the NATO kind of 3, 5, whatever you want to call that number, we should include space.
Exactly, and this is, I think, the good part of it, or the good part in the sense of that the funding that comes from the ministers of defense into these ministerial can be accounted against these thresholds of NATO, whether they are 2% or 3% or 3.5 is yet to be defined. But yes, this can account against the threshold, and I think this is a good way also of investing in R&D technologies, because defense and space go hand in hand. We have a European commissioner in Brussels in charge of defense and space, and this becomes more and more an activity also in Europe, and also ESA is getting more and more requests from our member states to invest and develop technology in this domain.
How big a difference will the Airbus, Leonardo Thales merger make? How does that change the landscape? Consolidating European defense know-how, space know-how. How big a factor is that going to be?
Yeah, I mean, there's the discussion between Airbus, Thales, and Leonardo now to merge the space part of it. That's an ongoing process, so it's really up to them. It's not for me to
But I'm just wondering how it changes the landscape for you.
It does change the landscape because you will have one very large company in the future, or whatever the name will be, in the space sector. You still have other LSIs, so large system integrators. OHB is one of them. Others may emerge. So for me, as European Space Agency, of course, I'm on one side. Our job is to develop space industry in Europe, large and small. Of course, if we have one very large one, we need to make sure that the supply chains, the competition is manifested. And I'm in very good discussion here, really, with the three CEOs of these three companies to make sure that we find a good way, because ESA can help in this process. While industry consolidates, we can help to make sure that we remain competitive and we build up a very competitive landscape. And that's my job, and that's what I'm doing all day in, all day out.
Ariane, we've had a couple of launches. You maybe get 4 or 5 this year. We'll see what the number finally looks like. But we need more launch capability in Europe. You're just closing in on a competition that's been run. How much more capability could we have in Europe in terms of launch?
Yeah, I mean, Ariane 6 was really designed to meet the launch requirements that we have in the heavy lift sector. We have a medium-sized rocket called Vega C, which also regularly launches. But there's something completely new, and this I have actually looked very much across the Atlantic to see how the US has been doing it. NASA had a program called the COTS program, where they have been not developing the launch anymore themselves, as we have been doing it also in Europe. But now we want to become an anchor customer of launch services. So we would like to encourage industry to come with the best technical solution with whatever partner they want to team up with, and we buy a launch service, as NASA is now buying a launch service from SpaceX. So we're doing more or less a similar model, of course, made in Europe and adapted to European conditions. But yes, this is exactly what we do. So we just closed this competition to companies to express their interest, make very concrete proposals how they plan to do it. We've got a very high response, much more than I expected. Now we are evaluating them right now, and we prepare them for funding in the November funding round.
So when do they become the SpaceX of the US model? When do we see some of these companies?
I hope sooner rather than later, but of course they will start as smaller rockets.
27, 28, 29?
I think it takes a bit longer to... I mean, don't forget that also SpaceX, it took them, I would say, from the beginning until the reusability operationally, it took them 15 to 20 years. So it takes time, more than a decade, to really develop a heavy lift launcher of a new generation. So yes, these are new launchers that are coming on board. It will take quite a number of years. I think we learn a lot from the investments we have already. We can be faster than in the past, but yes, it will take a couple of years. But my expectation is that, of course, Ariane 6 is a really good rocket in terms of technology and performance, the same class as the Falcon 9 rocket, for example, in terms of payload into space. But I assume that in the mid of the next decade, this will be replaced by one of these new launchers that will grow by then into a large, that means a heavy lift rocket.
Just great to see you. Thanks for stopping by to see us. We'll look forward to hearing all the news that's going to be coming over the next few months. Joseph Aschbacher, the Director General of the European Space Agency. Thank you in the studio.
All right, Guy Johnson, we thank you. Joining us from the Paris Air Show. As we look at equities here in Europe, right across the screen, the Stoxx 600 weaker 0.9%. Particular underperformance for the DAX in Frankfurt. It's down 1.3%. As you look at the sectoral picture, every single sector is in negative territory, except energy, up 0.8%, as we see the oil price switching to the positive. Brent and WTI crude both up about 1.5%.
Coming up on the programme, then, Donald Trump cuts his trip to the G7 leaders summit short, but the US president denies an Iran-Israel ceasefire is the reason for that. He's gone back to Washington. We've had plenty more commentary from him on what he's watching from the Situation Room in Washington. We'll speak to Middle East watcher Jane Kinninmont. That conversation coming up shortly about what the conflict means for the US and its allies. This is Bloomberg.
President, came out. Why are you leaving the G7 early for Washington?
Well, I have to be back. Very important. I want to just thank our great host. You did a fantastic job. Thank you. In Canada. But you probably see what I see. And I have to be back as soon as I can. I'm going to have dinner with these wonderful leaders. And then I get on the plane. I have to be back early.
US President Donald Trump cutting his G7 summit trip short in Canada, but denying that it was to work on a ceasefire between Israel and Iran, saying his reason was, quote, much bigger than that. Let's get the latest with Bloomberg's Oliver Crook. Ollie, what do we know about why Trump is leaving the summit? Lots of conflicting reports here. Is it because the US is about to get involved in Israel's attacks on Iran?
Yeah, Lizzie, let's unpack a little bit of what we've had over the last couple of hours. So what you had first before the White House confirming that Donald Trump would be leaving the G7 early was this Truth Social post by the President of the United States that said that Iran should have signed the deal earlier and that basically Iran could never get a nuclear weapon. And then it ended by saying that everyone should immediately evacuate Tehran. That was the pronouncement from the President of the United States. And then we discovered that he would be leaving the G7 early in order to go back to Washington, D.C. to be more be better apprised of the situation. Then Emmanuel Macron came out and said that he was going to leave to D.C. to basically negotiate a ceasefire, to which, you know, there was another Truth post in which Donald Trump said that, no, it has nothing to do with that. Actually, this is about something that is much, much bigger, has nothing to do with a ceasefire. And so it leaves everybody sort of guessing of what the Trump administration is really up to here. And we got a little bit more detail from one of the reporters on Air Force One that is currently on its way to Washington, D.C., from Jen Jacobs over at CBS, saying that he didn't want to look at a ceasefire. He wants basically a deal in which Iran will give up the nukes entirely. He says that he does not expect the Israelis to relent at all on their barrage over the next couple of days, and that they'll see what happens after that, and that he needs to be present at the White House in order to not basically be reliant on telephones and to be briefed in person by a number of the people within the Pentagon and the White House. He also said that he was undecided about sending Steve Witkoff or JD Vance to negotiate with Iran. This is something that's on the table, but he has not made a decision yet. And he also critically here, and this is the big question, he declined to say if the chairman of the Joint Chiefs of Staffs and the Secretary of Defense had provided him with planning options should Iran attack the U.S. bases in the Middle East. He said he cannot tell you that. So these are the situations here where basically we go with the president who has left this meeting early in order to, one, potentially try to get negotiating table with Iran, try to get a deal, a more comprehensive deal over the line, or could it be that the United States wants to get involved and potentially could be take a more active role in this conflict between Israel and Tehran? I suspect part of the goal of the Trump administration at this stage is to have that strategic ambiguity that all the cases are basically on the table. I think what it is fair to say at this point is though Trump, we know, wants a deal with Iran, we are at the point of maximum sort of pressure in terms of the negotiations right now.
And so that's Trump's departure from the G7, Ollie. Did we get any agreement before he departed? There was a statement. They did all manage to coalesce to some degree on some thoughts around Israel and Iran.
Yeah, so interestingly, I'll just give you a quick summary of what they said in that statement. Basically, that they're committed to peace and stability in the region, but they also affirmed Israel has the right to defend itself, reiterated support for the security of Israel, and that Iran, I should say, is the principal source of regional instability and terror. And they've been consistently clear that there should never be a nuclear weapon available to Iran. This is after the United States got involved with the statement. We understand that they took out some of the language. They took out language talking about seeking restraint from both sides on international law. Also took out language on a diplomatic solution as being the ideal course for this conflict. So this is the influence from the United States. And we should say this is coming at a time when, again, this is distracting from a whole host of other issues that are going on across the world. The EU leaders really would have liked to have seen some more action against Russia. And as a consequence of what's going on in Iran and Israel, we're not even talking about, for example, the huge bombing campaign that the Russians have led over Ukraine. So this is just another one of the issues that are facing the G7. The leaders that still remain there without the United States, it's going to be hard to see them making any progress.
Absolutely, a crucial conversation that feels like the Europeans not so much a part of. Bloomberg's Oliver Crook giving us the update from Berlin. We thank you so much. Let's bring in another expert. Jane Kinnamont, Middle East watcher and co-host of the Disorder podcast, joins us around the table. Jane, you're joining us on day 3, or I should say day 5 now, of the conflict, day 3 from a trading perspective. What comes next? What are the flashpoints here?
The million-dollar question is about whether the US is going to become more directly involved in this. And as everyone sits trying to parse the social media postings of the president, really conflicting messages have been given. On one hand, Donald Trump has been saying that he wants there to be peace, that his focus is on nuclear. On the other hand, he's been saying that everyone in Tehran should evacuate. So it's left everybody unclear. Most of the other G7 leaders have been largely out of the loop. Now, the Israelis will be asking the Americans to come in and help them to take out the underground Iranian nuclear facility at Fordow. That is what the speculation is currently focusing on. They will be saying to the US, we cannot properly defeat Iran's nuclear program unless we have US assistance to do this. The US has been moving more military assets into the region because of that. But this is obviously also very divisive inside Trump's base, because this is a president who campaigned on no more forever wars, etc. The other possibility, which may appeal more to Trump, is can he get Iran back to the negotiating table and get them to back down on their previous position on nuclear? But Iran also has national pride to think about, and the leaders don't necessarily want to be forced back to the table. They have said they would stop attacking Israel if Israel stopped attacking them.
When, as you say, this is so at odds with the foreign policy that Donald Trump ran on, why do you think he would potentially get involved actively supporting Israel here? Do you think that it's because there's a real threat to the Strait of Hormuz, or that Iran really would attack US bases in the Middle East?
Iran may be quite cautious about taking moves that would widen the war unless they think that the US is definitely going to get drawn in. I think at the moment they may still be hoping that they can keep the US out, because the US is a much bigger threat to them. But at the same time, now that the war is underway, Trump faces a really difficult choice himself. You know, does he leave Israel's job essentially half finished? And he has many people in Washington also saying they are our ally, you have to defend them. So for once, a president who has tried to look extremely decisive actually looks like he's not certain what to do.
Jane, what is our experience of flare-ups and violence in the Middle East, and how quickly those things can be brought to an end? Because we keep hearing from Europeans in our conversations with the Spanish foreign minister earlier, and in all of the weekend narrative from various European governments, it was all about de-escalation, de-escalation. But what is needed to actually bring that about?
Well, there is one question about ending the hot phase of the conflict or preventing it from widening. There's another question about getting to longer-term stability. And what we've seen in the past recent years from Israel is that the Israeli military and intelligence services are incredibly effective at going after their enemies. But there isn't a strategy from Israel to stabilise the region. And indeed, they don't really see that as their job. They are focused essentially on firefighting, decapitating enemies. But then if you look, for instance, at Syria, where one of Israel's traditional adversaries, Assad, was overthrown, there's then no plan to actually build a peaceful relationship with the new government. It ends up being military only with not much more stabilisation. Now it seems that one of the lessons the US and others learned from Iraq was not to go into other countries and try to nation build, but instead there's a big risk of leaving a vacuum. And this is something Iranians are also worrying about. Many of them would like to see the back of the Islamic Republic, but what comes next, and is there a risk of chaos and disorder there?
Well, you make a key point, because domestically, this is exactly what Donald Trump is playing to. We saw this under Joe Biden and the withdrawal of troops from Kabul and Afghanistan, and that the U.S. shouldn't be, at least from a domestic point of view, getting involved in the Middle East. That being said, you talk about kind of the bombings in terms of targeting underground bunkers in Iran. Does that put perhaps the conversation of some of the early elements of the JCPOA back on the table when it comes to access, inspections? If Iran was to come to the negotiating table, does that help or hinder that case?
I would say it hindered, but that's because, up until the attack started, Iran was already negotiating. But it was negotiating unilaterally with the US. There were not other parties involved in that. Perhaps if it had been, it would have been more difficult to derail it. The issue now is, why would the Iran, this anti-Western country that has always said the US can't be trusted, why would they now think they can get a deal with the US that the US will abide by?
Just really briefly, Jane, to what extent does the higher oil price help Putin in Ukraine?
Well, it's a boon for Russia to get more income in, and you can also see that he's benefiting from distraction, that while the world is focused on the Middle East, there's less attention paid to what's happening in Ukraine, including strikes on residential buildings in Kiev today.
Well, it seems like everybody's round the table except for the EU at this point. You've got the Middle East on the table, the US, Russia and China. Really good to get your perspective. Jane Kinnimont, Middle East watcher and co-host of the Disorder podcast. Really good to get your insights. We thank you. Well, it's a busy day in markets, and we've seen already the European equity story red across the screen as things stand. Futures pointing lower stateside as well. Oil higher now, but we keep to digest these headlines coming out of Washington.
Yeah, a lot of nervousness, it would seem, being created then in futures. Certainly in the United States, Kriti, those are weaker, partly as a result of what we're hearing from President Trump and the lack of certainty about the position there. Here in Europe, energy stocks, the only area where we see green. Some of those on the rise this morning.
Absolutely. And this, of course, comes as the European stocks are dropping as well. And you mentioned the energy piece of this. We're now at a 1% decline on the Euro Stoxx 50. It gets worse if you look at the likes of the DAX or even the IBEX. That's where you see the pain. And yet, oil in the, well, marginally in the green now, but briefly in the red. That does it for the opening trade. The Pulse is up next. This is Bloomberg.